Welcome back, everyone. It's so great to have you here with us. We genuinely appreciate you taking the time to click on this video today and, learn with us.
Yeah, thanks for joining us. We've got a lot to cover today.
We really do. We have a massive show ahead because we are breaking down the NVIDIA Q4 fiscal 2026 earnings call. This call literally just wrapped up earlier today, February 26, 2026. And to be honest, the numbers are loud, but the strategy underneath them is even louder.
It really is. I mean, if you've been watching the headlines, you've seen the stock price move, obviously. But what happened on this call marks a pretty definitive shift in the whole narrative.
Right.
We aren't just talking about training chatbots anymore. The company is pivoting the entire industry toward what they are calling Agentic AI, and the financial implications of that are frankly historic.
I definitely want to dig into that agentic concept because on the surface, it sounds like buzzword bingo.
It does, yeah.
But I have a feeling you're going to tell me it's not. But before we get to the Q&A, which was just packed with analyst questions, let's set the table. We need to summarize the prepared remarks delivered by CFO Colette Kress and the CEO, Jensen Huang. So give us the headlines.
Okay, so ideally, you'd think we would see things slowing down by now, right? Just due to the law of large numbers. But
it's not happening.
It is not happening. Financially, NVIDIA delivered total revenue of $68 billion. That is up 73% year over year.
73% growth. I mean, at that scale, that is usually where gravity kicks in and pulls you down.
Gravity has not arrived yet. The primary driver was data center revenue, which hit $62 billion. That's up 75% year over year.
Insane.
Right. And if you zoom out to the full fiscal year, data center alone generated $194 billion.
Yep.
And the profitability is holding completely firm with non-GAAP gross margins at 75.2%.
That margin profile is still wild to me.
Yeah.
They are essentially selling hardware with software-level margins.
Exactly. And that resulted in $35 billion in free cash flow in just Q4 alone.
Okay, so they have an absolute war chest. What are they building with? We heard a lot about Blackwell, but there were some new names dropped today, too.
Right. So Blackwell demand is strong, obviously. But they officially unveiled the Rubin platform.
Rubin?
Yeah. This is the next generation. It features the Vera CPU, the Rubin GPU, and the NVLink 6 switch. And they expect production shipments in the second half of this year.
Wait, didn't Blackwell literally just ramp up? Introducing Rubin this fast feels extremely aggressive. Is this just like planned obsolescence?
It's strategic aggression. By accelerating the roadmap so dramatically, Jensen is basically telling his customers, don't bother looking at our competitors' chips that are coming out next year. We have something infinitely better shipping in 6 months.
It's a moat built on pure speed.
It really is.
That makes total sense. You just keep the customers on the treadmill. What about the networking side?
Networking is becoming a giant business in its own right. So revenue there was $11 billion, up 3.5 times year over year.
Wow.
Driven mostly by Spectrum X Ethernet and NVLink. And crucially, they updated us on strategic partnerships. Jensen mentioned OpenAI's launch of GPT 5.3 codecs, a $10 billion investment in Anthropic, and this is the really interesting one, a licensing agreement with Grok.
For low latency inference, right?
Exactly.
But wait, Grok. I thought they were a competitor trying to dethrone NVIDIA on inference speed.
They are, well, they were. We will get to that in the Q&A, but it looks like NVIDIA is opting to absorb the tech rather than fight it.
The classic, if you can't beat them, buy a license move. Okay, and finally, before the questions, what is the guidance looking like for Q1?
They expect revenue of $78 billion, plus or minus 2%. They also made a policy change. They are now including stock-based compensation in non-GAAP results, arguing it aligns better with how they view talent retention.
Interesting accounting shift.
Yeah. And for anyone watching the geopolitics closely, they are assuming literally zero data center compute revenue from China due to export controls.
Zero from China. And they are still projecting $78 billion. That is a massive statement.
It really is.
Okay, so that is the setup. Now, I want to get into the real meat of this. We are going to go through the Q&A session question by question. This is where the analysts really try to poke holes in the story and where Jensen usually drops his, philosophical bombs.
Let's do it.
First up, we had a question from Vivek Arya with Bank of America Securities.
Yeah, Vivek went straight for the elephant in the room, the bubble. He noted that cloud CapEx is approaching $700 billion across the industry.
Which is staggering.
Right. So he asked, is this sustainable into next year? And if customer CapEx doesn't grow, can NVIDIA still grow?
This is the question every single bear in the market is asking. Who is going to pay for all of this?
Sure.
How did Jensen handle it?
He didn't flinch at all. He used a very specific phrase. He said, compute equals revenues. His core argument is that we have hit the inflection point of agentic AI.
Okay, stop right there. Agentic AI. Explain that like I'm 5 because it sounds incredibly important, but a bit dense.
Sure. So think of the last generation of AI, like standard chat GPT, as a librarian.
Okay.
You ask a question, it finds an answer, it's passive. Agentic AI is more like a project manager. You give it a goal, like build me a website for this new product, and it goes off, it writes the code, debugs it, sets up the server, and actually finishes the job.
So it's actually doing labor. It's doing work.
Exactly. Jensen's point is that agents like OpenAI's Codex or Cloud Code are generating what he calls profitable tokens. They are doing work that generates immediate revenue for the user.
I see.
So unlike traditional software where you write it once and sell it a million times, AI requires massive compute every single time it does a job. So if customers want to grow their revenue, they absolutely must invest in more compute to grow.
So he's arguing it is not discretionary spending. It is literally the cost of goods sold for the modern economy.
Precisely. It's the new baseline.
All right, let's move to the second question. This was from Joe Moore at Morgan Stanley.
Joe was looking at that massive cash pile. He asked about the strategic investments, Anthropic, OpenAI, and partners like Intel and Nokia. He basically asked, how does the balance sheet actually help grow NVIDIA's ecosystem?
It's a valid question. They are spreading billions around like it's candy right now. What's the end game strategy there?
Ubiquity. Jensen said NVIDIA wants to put everyone on their platform. The ecosystem has expanded way beyond just GPUs. It's the full AI infrastructure now. CPUs, networking, models, everything.
Right.
So investments are focused on ensuring all new AI ecosystems, whether that's biology, robotics, language models, are built on top of NVIDIA.
It sounds like they're basically building the roads. It doesn't matter what kind of car you drive, you still have to pay the toll to use the road.
That is exactly the play. Spot on.
Next up was Harlan Sur from JP Morgan.
Harlan focused heavily on networking. With that revenue accelerating 3.6 times growth, he asked what the runway for Spectrum-X Ethernet switching is looking like for the rest of the calendar year.
Networking really feels like the unsung hero of this earnings call. Why is it growing so incredibly fast?
Jensen framed this beautifully. He said NVIDIA is now an AI infrastructure company, not just a chip company. His exact words were, we ship racks, not nodes.
We ship racks, meaning they sell the whole server cabinet at once.
Yes, exactly. NVLink really turbocharged that business. And Jensen noted that NVIDIA is now likely the largest Ethernet networking company in the entire world.
That's a huge shift.
It is, and the reason customers buy it is performance. He said Spectrum-X increases data center utilization by 10 to 20%.
That sounds super technical, but translate that to dollars for me.
Okay, so if you are Microsoft or Google and you spend $10 billion building a new data center, a 20% efficiency gain means you just saved $2 billion, or rather you gained $2 billion in free productivity.
Which more than pays for the networking equipment.
It pays for it 10 times over. It translates to real money for customers immediately.
Okay, when you put it that way, the hardware literally pays for itself. Let's look at the fourth question. This came from CJ Muse at Cantor Fitzgerald.
CJ asked about that Grok licensing deal we mentioned earlier. With Grok likely adding a decode-specific solution, CJ asked if NVIDIA views customized silicon, or what they call dialects, as an increasing focus.
This is that frenemy dynamic. Grok does things very differently than NVIDIA.
They do, and Jensen strongly defended his unified approach. He avoids dialects, meaning separate, specialized dies whenever possible to avoid latency and power taxes. He literally called it a dialect tax.
The dialect tax, meaning moving data back and forth costs time and energy.
Exactly. They prefer giant, unified dies. However, he did say they will extend the NVIDIA architecture with Grok's innovations.
So it's basically, our way is better, but your way has some cool tricks, so we are just going to integrate your tricks into our massive ecosystem.
Pretty much. He compared it to how they integrated Mellanox. They just absorb it.
Resistance is futile.
Yeah.
Okay, next was Stacy Raskin from Bernstein Research.
Stacy asked about the guidance for sequential growth. She wanted to know if the ramp of the new Rubin chip will allow for similar sequential acceleration as Blackwell did. She also asked about gaming and whether that can still grow year over year given the supply constraints.
It really feels like gaming is the forgotten middle child in these calls nowadays. What did Colette say to that?
Well, on Rubin, she was pretty cautious. She said it is too early to quantify the specific Rubin ramp, but demand is obviously very strong.
And on gaming.
A bit of a reality check. She said supply will be very tight for a couple of quarters. Growth entirely depends on if supply improves by year-end, and it's just too early to tell.
So if you are a gamer trying to buy a new card this year, good luck.
Yeah, pretty much.
Tough break for the demographic that originally built the company.
Hmm.
Okay, question number 6 came from Atif Malik at Citi.
Atif asked about CDAY. That's the software layer. He asked, what is the importance of CDAY as investment shifts more toward inference workloads instead of training?
Right, because this is the classic bear case. The idea that once you train the massive model on expensive NVIDIA GPUs, you can just run it inferencing on cheap commodity hardware. So you wouldn't need NVIDIA for that phase.
Correct. But Jensen totally rejected that premise. He argued that CUD is absolutely essential for inference. He brought up the NVLink 72, pointing out that it delivers 50 times the performance per watt.
50 times. But again, why does that matter if the underlying chip is super expensive compared to the commodity option?
Because, as Jensen says, tokens are dollarized.
Another great Jensenism. Break that down for us.
He's saying that performance per watt directly equals revenue for customers. Every data center is fundamentally power constrained. They only have so much electricity.
Right.
So the most efficient architecture, the one that prints the most tokens per watt, wins, regardless of the upfront hardware cost.
So he is completely reframing the price tag. It's not about the capital expenditure of the chip. It's about the operating expenditure of the electricity.
Exactly.
Fascinating. Moving on to question 7 from Ben Reitzes from Milius Research.
Ben asked about those mid-70s gross margins. He asked if they can be sustained long-term, especially since we have supply visibility all the way into 2027 now.
It kind of defies economic theory. Eventually, competition is supposed to drive margins down.
Jensen's answer was basically generational leads. He said margins are sustained by delivering those leads. If NVIDIA delivers performance per watt that exceeds Moore's law, and they price it right, the margins hold.
So as long as they keep outpacing everyone else.
Yeah. He added that the demand for tokens has gone completely exponential, which requires an entirely new infrastructure every single year. Blackwell this year, Rubin next year.
So the moment they stop innovating, the margins collapse. But as long as they are shipping back-to-back revolutionary chips, the margins stay.
They are selling a scarce resource, essentially.
All right, question 8. This was definitely the fun one. Antoine Chikabon from New Street Research.
Yes. Antoine asked about the feasibility and economics of space data centers.
I genuinely thought this was a joke when I saw the headline.
Yeah.
Are we really talking about putting server farms in orbit?
We actually are. And Jensen was surprisingly grounded about it. He admitted the economics are really poor today, mostly because cooling is incredibly hard in a vacuum. You have no air, so it's only conduction.
Right. But then what is the upside?
The solar energy is abundant. But more importantly, the killer app is imaging. He noted that NVIDIA Hopper is already in space testing this.
But why process it in space?
Because right now, satellites capture petabytes of high-res data, and beaming all of that back to Earth takes massive bandwidth that we just don't have.
Ah, I see. So you process the raw photo in orbit and just send the tiny compressed answer down to Earth.
Exactly, processing it right there at the source.
That is wild. NVIDIA in space. All right, back down to Earth for question 9 from Mark Lapakis at Evercore ISI.
Mark asked for clarification on revenue diversification. He pointed out that if hyperscalers, the massive cloud providers, are 50% of revenue, are the non-hyperscalers growing faster? Is the customer base evolving?
This is all about concentration risk. If one big tech giant cuts spending, does NVIDIA crash?
Colette jumped in here to say, yes, there is extreme diversity now. They are selling to sovereign nations, traditional enterprise, automotive.
And Jensen added something about open source, right?
He did. He said NVIDIA is in every cloud and on-premise, making the platform fungible.
Fungible meaning interchangeable.
Exactly. He pointed out that Hugging Face, the open source platform, has 1.5 million models running on CUE right now. So this ubiquity lets them serve a massively diverse customer base beyond just the top 5 cloud guys.
Got it. Okay, question 10 from Aaron Rakers at Wells Fargo.
Aaron asked about the importance of the Vera CPU as a standalone solution.
Because normally we're just talking about GPUs, so it's interesting to focus on the CPU side.
Right. Jensen explained that Vera is designed very differently than other CPUs. It uses LPDDR5 memory and focuses heavily on high data processing bandwidth.
Okay, but what is the specific use case for that?
It is optimized for that post-training phase we talked about earlier. When agentic AIs use tools, they often require incredibly fast, single-threaded performance.
So it's a CPU purpose-built for the AI project manager.
Exactly.
Question 11 from Tim Arcuri at UBS.
Tim asked the classic shareholder question. With around $100 billion in cash generation, why not put a bigger stake in the ground regarding share repurchases?
Show me the money.
Pretty much. Colette played the disciplined CFO here. She said priority number one is supporting the ecosystem and securing supply capacity.
So no massive buyback spree.
Right. They will continue to be disciplined with buybacks and dividends, but they view strategic investment in the supply chain and their developers as the primary use of capital.
And honestly, with the growth rates they are putting up, I would rather they invest the dollar internally than give it back to me.
Yeah, their ROI is a bit better than the average investors right now.
Exactly. Okay, last question. Jim Schneider from Goldman Sachs.
Jim went for the big macro picture. He asked if Jensen still believes in the potential for $3 to $4 trillion in data center capex by 2030. And he asked what drives it. Is it physical AI?
$3 to $4 trillion. That is literally the GDP of a major country. Did Jensen stick to his guns on that number?
He absolutely did. He said yes. His logic is that the very nature of software is changing from pre-recorded, which is just retrieval, to generative, which is real-time creation.
And generative requires vastly more compute.
1,000 times more compute, according to Jensen. He mapped it out. Agentic AI is the current inflection point.
And then physical AI follows that.
Right. Robotics, manufacturing. Since compute drives revenue, he said the world will build the factories needed to produce the tokens. The data centers are the new factories.
That is an incredibly powerful image. The data center isn't a cost center for IT anymore. It is the factory floor of the modern economy. Okay, we have covered a ton of ground here. Let's try to wrap this up. If we strip away the hype and the stock prices, what are the main themes you took away from this presentation and Q&A?
I'd say there are 4 main themes to really digest here. Theme 1 is the shift to agentic AI. Software that actually thinks and uses tools is the new revenue driver.
It's not just a chatbot, it's a digital worker.
Exactly. Theme 2 is the concept that compute equals revenue. NVIDIA is successfully selling the ability to generate money, not just selling silicon chips.
Which completely justifies their valuation in the eyes of their customers.
Right. Theme 3 is that the roadmap is accelerating. Blackwell is ramping, sure, but Rubin is already sampling. They are moving at a breakneck pace.
Keeping the competition constantly on the defensive. And the final theme.
The definition of the market has expanded. It's physical AI, robots, cars, and even space. And NVIDIA is acting as the full infrastructure provider across all of it. Chips, networking, CPUs, everything.
They're positioning themselves to be the electricity grid of the 21st century.
That is the ambition, without a doubt.
Well, it is certainly fascinating, and we will be watching very closely to see how they execute on this Rubin rollout. That brings us to the end of our breakdown for today.
Thanks for listening, everyone.
Yes, thank you all so much for watching. If you enjoyed this video and found the breakdown helpful, please click the like button. It really helps the channel out. Share the video with anyone you think might find it interesting, and be sure to subscribe to the channel so you can stay tuned for all our upcoming content. Thanks again, and we will catch you in the next one.